Good morning, everyone. Welcome to the TradeXchange weekend webinar. First, just to give everyone a quick peek at some of the announcement on the TradeXchange news desk, which was sent over the weekend. A few updates to the news desk. We did adjust and fix that scrolling feature, everyone. Now you have the ability to scroll down on the news desk without having a new post bring you back to the bottom or the top, however you have it scrolling. So it gives you that pause feature, and then you just hit the enable button to bring you back to the live stream. On the Squawk side, members, we are working on a new, faster, cleaner version of the Squawk. We are very excited to have this released this quarter coming up. So that is one of the key things we are working on. We want to make sure we present all the information cleaner, faster, and smoother to all our members. On the TradeX Plus side, just a few updates. We are working on a better integration into the news desk. If anyone has any questions regarding TradeX Plus, you can always reach out to us via email or ask the desk. Once we are finalizing and finished up the Squawk, we finally will be able to release our app. We are working on getting that finalized. We did have a few glitches in regards to getting that set up, but we are finalizing that and just waiting for the Squawk to be finalized so we can send that out to all our members. We have also retooled the news desk, so you do have access to that via any browser, via on your phone or on your tablet browser. So if anyone has any questions on that, shoot us a message. Quick thing on the weekend webinars, as always, we do have these on Sunday at 10 a.m. Just a brief look at the markets and what we're looking at a week ahead, as well as any members have any questions or comments, or you can just ask them during the webinar, and we'll be answering those at the end. Our community chat room. Our goal is to have it released next quarter. We are very excited to get this up and running. Just to have an area in our outside of the news desk, it will be a separate portal outside the news desk where our members can gather, share ideas, thoughts on markets, and on any other views in regards to trading or educational aspects. Also, members, keep in mind we do have our affiliate program. What better way to make some extra money during the holidays? You can always reach out to us in regards to our affiliate program. We do have specific access to our affiliate website, which gives you the ability to track any and all subscriptions referrals. We start that at 25%, and then we do have it tiered up to 35%. So just wanted to go over that real quick. If anyone has any questions on that, just shoot us a message. We'll definitely follow up on that aspect, or if anyone has any concerns or questions. Now jumping to our week ahead webinar. Just a brief recap of last week. U.S. markets saw weakness following the CPI report on Tuesday. Even with the decline in the CPI data, numbers did come in hotter than expected, with core inflation rising to 6.3%, which did bring weakness to U.S. markets, strength to the yield and the U.S. dollar. The yield markets have shown gains for over 7 weeks in a row, so that is something to keep a close eye on in regards to market activity. Following the release of the CPI, we saw probability shifts of a 100 basis point hike, with still, though, a majority seeing a 75 basis point hike coming this week. S&P 500 ended lower on the week by 4.7%, and NASDAQ down 5.5%. On the yield side, the 2-year yield hit its highest level since 2007, with the yield curve remaining inverted. One thing that we took note, as well as speaking to traders, is that the VIX, the volatility index, really has not gotten into that fear territory. A lot of traders mentioned something above 30s as that fear look. One other aspect is selling has been pretty orderly. Average volumes continue to be below average year volume. So we are watching the VIX on that fear mentality of a fear spike which we have not seen as of yet. One thing on earnings season is coming in mid-October, usually the start. Many estimates, though, have dropped from early expectations of about a 10% rise year over year to a low-end 3.7% rise now year over year. We ended the week with commentary by FedEx's CEO saying he sees a global recession ahead, which did impact markets on Friday and the mentality of what is to come in the future markets going into the holiday season. This week, members, is all about the FOMC meeting, which is on Wednesday with the Fed chair presser at 2:30 p.m. Once again, following that inflation report, traders are expecting a raise of 75 basis points. The question on our minds, and in regards to what the Fed will say, is what is next? So we have had a lot of people commenting on the Fed mindset. We had Goodlaw coming in saying 25 basis point hikes. We have others, traders and economists coming out saying 100 basis point hike. In all reality, the thought process on our side is these are traders. They trade their book. So what we view as a inflation is we view the mindset of the everyday American, which clearly is getting an impact across the board when it comes to this inflation. It is a ultimate tax across the board to all Americans. And I'm sure that is what the Fed is watching while they make their decisions in regards to what is best for the American economy. So just a brief look at what is next for the week ahead. Upcoming U.S. and world events. On the earnings side, we still have earnings by AutoZone, AZO, and General Mills, GIS. On Monday, we have Japan CPI. We have Climate Week beginning. We have World Bank Malpass is speaking, and the RBA meeting minutes. On Tuesday, on the U.S. side, housing starts. Keeping a close eye on that as one key indicator in regards to the inflation headlines. Also on Tuesday, the FOMC meeting does begin. We have Germany, sorry for that typo, Germany PPI, as well as the Canadian CPI. Wednesday, we have the all-important FOMC announcement, followed by the Fed chair press conference. We also do have some more home numbers with the existing home sales. And overseas, we are watching the Bank of Japan announcement. On Thursday, on the speaker side, we do have Janet Yellen speaking, as well as bank CEOs testifying, starting on Wednesday to Congress and Thursday to the Senate. On Friday, we do have the U.S. PMI composite, as well as the Germany and Eurozone composite flashes. Company events for the week, as always. Monday, we have the shareholder meetings and analyst calls. A brief list of all the names that are scheduled on events. Conferences for the week. Conferences continue to build. We always have a build going into the holiday season. All these conferences, as always, members, if you have any questions or comments in regards to who is presenting, if we have access to those, we will just allow them to be sent over to our members. As always, you can shoot us an email or reach out to us via Ask the Desk in the news desk. Economic data for the week. Monday, housing market index. Tuesday, keep in mind, we got the FOMC meeting beginning, and we are also going to be watching this housing starts and permits. Wednesday, keying on the FOMC announcement, as well as the Fed chair press conference. We also do have the existing home sales, which is in our opinion, one of the key indicators on that inflation mindset. Thursday, we'll be keeping an eye on leading indicators, as well as always, the initial jobless claims. Friday, we have PMI composite flash, as well as Fed Chair Powell will be speaking. So we have that on the agenda as well. On the international side, we added this last week just for our members to keep an eye out on the international headlines in regards to their economic data. So we do have some aspects of those posted in the weekend report. Earnings for the week, as always, like we mentioned, we have on Monday, AutoZone, AZO. Wednesday before market, we have GIS, General Mills. So those are some of the key ones we'll be watching coming up. Fear and Greed Index. Previous close, it was in the 40s. With last week's weakness, we are seeing the fear mindset continuing as it is bringing closer and closer to the mid-level of fear. Fear index currently at 36. We'll be keeping an eye on that in regards to any impact that fear mindset will have on the VIX, since we are waiting for that VIX fear spike to hopefully give us a better indication on some sort of a bottom in the markets. Weekly sector performance, weakness across the board. Got clear weakness in materials, industrials, real estate, and tech. Also saw weakness in communication services. We did see not much weakness, but some sort of stabilization trying in the healthcare as well as energy markets. Industry comparisons, we always keep this here to give us an indication of the pre-COVID move. This is COVID, that fear drop in COVID. We saw that strength as all the money has been pumped into this economy. Now, with the money being taken out, we are starting to see a little downtick in markets. Clearly, though, still above pre-COVID levels in all three top indices. Going into next week, target rate probabilities, we are expecting an 82% on that 75 basis point hike, 18% of traders looking for 100 basis points. The yield invert at -0.4. Year-to-date returns for the weekend. Still green, nat gas, the VIX, heating oil, gasoline, corn, crude oil, and wheat. We did see pretty much drops across the board in all of these areas. So we are watching if there is any upside move. One move we did see is the VIX did jump about 20%. Outside of that, we really did not see any positive moves in markets. We did see some pop in platinum as well as silver, which has been interesting since silver was one of the worst ones. If you go back on our weekend reports, silver is typically right around lumber. So silver has seen a little pop as of late in this market. Your AAII Investor Sentiment Survey, week ending September 14, we are seeing, interesting though enough, a bump on the bullish mindset, as well as a drop on the bearish mindset. So it'll be interesting to see how this survey comes into this week, especially with your FOMC meeting set for Wednesday. Sector outlook, as always, energy utilities continue to be green. All the rest saw weakness across the board. You have this weekend's followed by the previous week. So clearly the weakness was broad-based in this market. IPO lockups this week, ANTX on Wednesday. Expected IPOs as well as your FDA calendar on what is expected coming up for the week. So we'll jump on some charts real quick. This is the SMH daily. We added a new level support at the 200 level. Following last week's support break at 206s, we saw a test of 200 and a bounce to end the week at 203.91. We mentioned last week on our webinar to watch 200s as a key support level. We didn't add it because it was such a lower price. So who would have expected that kind of a drop within the week? But we did mention that level as a watch. It did bounce off that support level and closed at 203.91 for the week. Looking at your SPY daily, we extended the downtrend now from last week as we did hit new short-term lows. We mentioned last week to watch that 390 support level for an indication on any directional move. Once that 390 level wasn't broken, we did see a test around the 380s, with ending the week at 385.56. No other changes were made to this chart, so we were expecting that level as a support level, which we did see it almost test last week. That's on your SPYs. Looking at your SPY weekly, no change to the chart. Clearly, the weekly is a little more long-term view, but it is trending right on trend lines and support levels. So we are going to be watching the weekly on the SPY to give us a better, broader, longer-term outlook on the SPYs. SPY daily with trend lines as well as moving averages. Triple Q daily with trend lines, as well as once we saw that trend line break, we are seeing a support level test, as well as moving averages, as well as on your IWMs. Your NASDAQ monthly clear downtrend being placed with support levels watched around the 11,000 level. So we are going to be watching any support tests, but clearly keeping an eye on this downtrend for any upside move. 10-year yield weekly, no change to this chart. As we can clearly see, this chart is a pure technical move in our opinion. once the downtrend was broken, straight upside move, testing resistance on the week and ending at 3.448. So we are watching the upside move around 3.5 for any clear indication to the upside, but clearly watching this uptrend for a possible move to either a base or a break to support levels. So we'll be keeping a close eye on your 10-year yield. Next up, IWM weeklies. No changes to the chart. Watching the IWM on a weekly longer term view, we see a base being built, which we are keeping a close eye on as we watch support levels at the 176s and resistance at 188, 190s. So we are watching these two levels as a basis being built on any directional move moving forward. HYG daily with your moving averages and support resistance levels. S&P on a monthly basis, basically trending right to support with your moving averages, slowly seeing these cautionary turns. So we are watching the S&P on a monthly basis. Keep in mind, when we look at a monthly or weeklies, we're looking at a more longer term view rather than the dailies that give us a shorter term outlook. IWMs as well on a monthly, we are seeing the negative actions in the moving averages as well as support tests coming across the board. Oil, no change to the chart. We continue to trade range bound in oil between that. Once that 85 level was broken, that 80-ish level became that key support level. We're trading in that $80 to $90 range. We are watching this downtrend for any upside move. Keep in mind, members, throughout the, since this is a daily, this trend line will creep slowly into the 90s. So we'll be keeping a close eye on if that downtrend is broken for an upside move. But we do key on any downtrend or uptrend breaks on volume. So we'll keep an eye out if that volume is strong to have that continued move to the upside. US dollar daily. We added an uptrend to the chart since we did hit new highs. So we're adding an uptrend. We're watching this level 108s as the key support level. Keep in mind as well that that is a break on the uptrend if that level is tested. So we'll be keeping a close eye on this US dollar, especially as we are going into this FOMC meeting on Wednesday. Bitcoin. Interesting aspect. No change to this chart, members. People always ask us, is crypto, can it be technical? Can it be an analysis on a technical view? All we can say is check the chart because as of today, in our opinion, it clearly is. It hit the downtrend to a T this week. Once it hit the downtrend and sold off back below $20,000 levels. We continue to watch these levels and trend lines for a clear directional move. But members, no change to this market on crypto, on Bitcoin for weeks on end. Hit the level to a T and sold off. So that's where we're going on these technical views. Members, it seems to be a technical market, even with the mindset of inflation and the FOMC on the agenda. So at this point, we'll leave it open for any quick questions or comments. We'll go radio silent on the mic. If anyone has any thoughts, comments, just shoot us a message in the chat box and we'll answer as we get them. So quick question on options. So members, when it comes to the options, we are working to get a separate webinar just on what our criteria is when it comes to the option market. So the thought process is we are going to be giving a webinar in regards to option activity, what we view or what we look for when it comes to options, and we try to give our members a breakdown. We don't give hundreds of plays. We try to give a breakdown of what our parameters are. We have the TradeXchange team has been working on options for 20 plus years. So we try to gather their knowledge and their views and try to pin down usually 5 to 10 option plays, unusual looks on a day-to-day basis, depending on markets. Please keep that in mind as well. If markets are seeing an insane amount of volume, typically the option flow will be a little more or less than expected. But we try to provide options and option views in regards to the thought process on what our TradeXchange news desk has used in the past to correlate them to future possible plays. So we are very proud about our options. We hear a lot of positive things about our options and our reports regarding options. Michael, yes, if you are, reach out to us. Let us, we'd be more than happy to discuss these with other option traders and love to get ideas and thoughts in regards to what they view or what they utilize, because we try to provide our views. Whenever we have something popping up in our parameters, we do provide them to our members on an unusual option look. As we always said, we do get very positive mentions regarding our option plays. So we do try to keep them at a low end. Everyone always asks, why don't we provide a lot more? At the end of the day, we don't want to flood the room. Also, we don't want to have situations where we're giving our members 30, 40, 50 option plays. We try to cut that down, as well as how we manage the news desk by cutting out the noise. So we had another question in regards to thoughts on markets. Members, clearly, our views are, we always try to provide a broad-based, generalized view. We're here to provide content to better your trading day, as well as giving more comfort in regards to moves on certain equities and overall markets. We believe the market is based right now on a technical aspect, as well as a view on what the Fed is looking to do. The Fed meets this week. This could dictate the rest of the year in regards to what is said and done during this announcement and Fed chair presser. So once that announcement is done, we can give a better idea. If anyone has any questions, you can reach out to us after the announcement to get our views. But we believe, as always, they say this is the most important Fed announcement. Clearly, they are all important these days. So that is our opinion. That's why we will focus the mindset and the thought process on what is said during that announcement and anything on that Fed chair presser. So members, want to thank everyone once again for joining us this week in the TradeXchange weekend webinar. We'll reach out to everyone who reached out to us via the chat to follow up on any of these questions. As always, yes, our view, our thought process, quality over quantity. Exactly like you said, Michael. So that's the thought process when we come with the TradeXchange. We don't flood the room. We don't provide noise to give it that fluff. Our job is to give you the content that is the quality content rather than the quantity in regards to the noise of what is going on, because there's a lot of noise these days. To filter that noise out is key. So thank you everyone for joining us today on the webinar. As always, this is recorded. We'll provide that to our members via the news desk. Thank you. Enjoy. TradeXchange out.